magnificent melonheads. Happy Inflation Day. Oh dear, what are they doing to us? What bologna sandwiches are they going to feed to us this morning? I don't know. We are 15 minutes away from the Bureau of Labor Statistics, the BLS, the BLS-BS CPI report, otherwise known as the Consumer Pricing Index. By the way, you have no idea how hard it is for me to enunciate Bureau of Labor Statistics. I have to focus 100% of my mental capacity into pronouncing that. I did my CPI preview video yesterday, and I must have done like 11 takes. I just kept going, Bureau of Labor Statistics, Bureau of blah, Bureau of blah, Bureau of Labor Statistics. See, it just rolls off the tongue when you stop and you focus on what you're saying. I hope you guys are doing good this morning. I see a lot of familiar names in the chat. Hello, Neil Hahn. Hello, Fat Vegan. Lucky Rips, new name in the chat. Hello, Cheshire Yeoman. Said it right? Huh? YouTube account. Skilver, that's a new one. Greeting from Switzerland, Mr. Skilver. Big Ugly MF, how you doing this morning, sir? Mr. Randall McMurphy, Andrew Bartlett. Mish, the moderator, is in the house. All right, guys. It is going well, and I would be remiss if I did not say hi, Mom. I love you. My mom is watching, God bless her. She doesn't care at all about the Bureau of Labor Statistics or the CPI index, but she watches all my live streams because she's just awesome, and moms are like that. So, Mom, if you're watching, I love you. Thank you for watching. Thank you for supporting the channel. All right. With that, let's shrink my big, fat melon of a head. Take a look real quick. Let's just see what the market is up to real fast here. Looks like we're mostly flat so far this morning. We got a little bit of a pop coming up a few points here for the S&P. The Dow about the same. Looks like Dow wants to open 100 points. NASDAQ right around the same area. Just wants to open barely in positive territory. Oil back into the 90s. Welcome back to the 90s oil. Those XLE and ERX calls that I am in are doing nicely. Looks like gold and silver are not making up their minds quite yet what they want to do today. 10-year is flat, awaiting the decision or the report from the BLS. Watch that 10-year yield, folks. Watch that 10-year yield. There it is. There's the chart. Only 3 minutes into the stream, and we've already got the chart up. This is the 10-year Treasury going all the way back to the 1970s. Got to watch that chart, folks. Watch that descending purple line. That is the trend line where something in the economy breaks, and we are getting, oh, so close to that trend line. That is at about 2.2% on the U.S. 10-year yield. We are now sitting at 1.92, and we should get some movement this morning when the index comes out. One way or another, we should get some movement. So real quick, just to give you guys a rehash of a little bit of the CPI preview I did yesterday, the market is expecting a 7.3% year-over-year number and a 0.5% month-over-month number. All right, those are market expectations. Higher than that beats, lower than that disappoints, if you will, although I don't know that anybody is disappointed by low inflation readings. And if you want to follow along at home, this is bls.gov/CPI. This is where the information will be released reliably at 8:30. They're usually right on the money with that release, and you'll see it here in the lower right-hand corner of the screen. We still have December's numbers right here. But real quick here, while we're on this screen, you can see some of the categories that have contributed to the big inflation readings in the past. Energy, obviously the big one. Let's take a look while we're here. Let's look at the December numbers. Again, we did this last night in my CPI preview video. If you're new to the channel, I usually do a video the night before where I go through some of the bigger factors that hit the indicator and just hash those out. Food was a big one in December. Food is about 14% of the index. It was only 0.5% month over month and 6.3% year over year. That's the one that most people obviously feel and most people notice. But the one that's really been hitting hard, well, there's two that have really been hitting hard, energy and vehicles. And you can see energy, real big year over year number back in December. That was 29.3% year over year, even though we actually had a negative month over month number. you guys remember, we had that big sell-off on Black Friday after the announcement of the Omicron variant, and that took down all the energy commodities, a lot of the energy stocks. That's actually when I bought my first round of calls in XLE, which ended up being a pretty good trade. I bought those on November 30th. So keep your eye on energy because we have had big moves in energy since the beginning of January this year. So we are going to get a much bigger month-over-month number in energy, and that's going to drive this year-over-year number even higher. So energy is going to be a bigger input today, and unless the shenanigans persist. But we'll see what they do. The other one that has really contributed has been new vehicles and used vehicles. And if you can see here, new vehicles 1% month over month back in December for an 11.8% year over year number. That is your chip shortage and the supply chain reflecting in the inflation numbers. Now, we actually had some leveling off in car prices for the month of January. So I think we're going to see pretty much zero for new vehicles. Maybe give or take a few tenths of a point, maybe. But for the most part, we're looking at zero. We're probably still going to have a big year-over-year number, although I'd expect it to come in a little bit. And the same thing for used cars, 3.5% month-over-month. That's huge for a month-over-month move. Back in December for a 37.3% year-over-year number. Huge, huge move in used cars. Probably the single best investment you could have made last year was a used car, believe it or not. Now, on the topic of used cars, I saw this chart today. Let's make sure you guys can see. And my big fat melon is in the way. But this is the Manheim Used Car Index. And this is, what site is this on? This is on Zero Hedge. You can see here in January, we leveled off. So even though for almost all of 2021, used car prices were up, they actually went flat in January. So we're not going to see a big contributor, at least month over month, from vehicles this time around. Those year-over-year numbers will still be big, but they will have come in quite a bit. So we are now 8 minutes away from the release of the numbers. Again, this would be released on bls.gov/CPI. And there's one other thing I wanted to talk about while I have your attention here, folks. And that is the number, if you've been following this channel, you know about this. And that is this rent number, this owner's equivalent rent. Okay, this is how the government manipulates the data, is through owner's equivalent rent. This is on Redfin, and this is only dated a couple of weeks ago. The rental markets, rents rose 14% in December, the biggest jump in 2 years. Okay, that is a national average of all the cities that Redfin tracks, 14%. But if you go to the owner's equivalent rent numbers in the BLS statistics, they said that rent only rose 4% in 2021. You see a disconnect here? Why are we 3.5 times as high in the actual data? The company that actually tracks this stuff, that they're for a living, right? That's their business from the BLS numbers. Because the government is financially incentivized to underreport inflation. Okay, there's a lot of things. There's the SNAP, Supplemental Nutrition Program, otherwise known as food stamps. You've got cost of living increases in Social Security, Medicare, Medicaid, right? All of these government support programs, military pay, pensions, they're all dependent on cost of living adjustments that CPI is an input to. So if the government were to admit exactly how bad inflation is, all of these government programs would get outrageously more expensive for the government. You see why they underreport now? Because they're financially rewarded to underreport the data. Now, the flip side to that, or the consequence of that, is because they underreport this data, namely this rent number, this is the big one that they underreport. Because they underreport it, the cost of living goes up, the pay does not, and life gets more difficult for people who are dependent on these programs. All right? So, dude, drive down the street in any city. All right? What do you see? You see tents lining the sidewalks, tarps lining the sidewalks. All right? This kind of garbage, this underreporting of the inflation, is a direct input to that. Okay? Obviously, you have things like substance abuse, you have things like mental health. Obviously, those are inputs into what's going on in our cities and the homelessness situation. But I'm telling you, folks, the debasement of the currency and the lies about it is probably the single biggest driver that is putting people below the poverty line. It is what has wiped out the middle class in this country for the last 40, 50 years. And if you have been among the lucky few, you have escaped into the upper middle class. And if you're not like the most of them, you were driven down to the point where you are now on a lifeline from the government, if not living in outright poverty. All right. So this inflation, folks, this is a serious, serious deal. I cannot overstate just how big a deal this is. So many of society's problems can be attributed to inflation, and it's also the main driver of this wealth disparity. I mean, for the last 40 or 50 years, the haves have made out like bandits at the expense of the rest of us, who now have to work more for a lower standard of living. All right. I'm off my soapbox, folks. I promise. I'm getting down off my soapbox. We are 4 minutes away from the release. Real quick, we're going to move my big fat melon of a head just to go over the energy numbers. Here is what oil did in January. Obviously, oil way higher. Gasoline, you guys have probably already seen. Gasoline way higher for the month of January. Natural gas kind of bounced around a little bit. Started a little bit lower. It ended January closer to 5. So even natural gas got more expensive, although this chart has been a little choppier. And I'm not really sure how they aggregate the data. Do they take a singular snapshot, beginning of month, end of month, or do they average it out? But natural gas probably won't hit the CPI as much as gasoline and oil will. All right. Now with that, let's go back to the BLS website. We've got 4 minutes, and I see Mr. Tunes and More, otherwise known as Harry Dan 2, the maker of the MMMRI chart. Thank you, sir, for the super chat, for supporting the channel. And he says, at some point, when the government's CPI gets high enough, I think people outside of communities like this are going to start asking and digging as to why their wallets are hurting more than the government says they are. Hashtag free silver, hashtag end the Fed. And the Fed. Mr. Harry Dan, too, sir, thank you very much for the super chat, for supporting the channel. I appreciate that, brother. And I am 100% in agreement with you. I think people are starting to wake up to what's going on, and they are starting to get angry about it. And I think you already see politicians trying to get out in front of that. They're trying to shift the blame to companies, to corporations, saying the reason everything's getting more expensive is not because of our reckless spending and our enablers at the Federal Reserve. No, it's because of the greedy corporations raising the prices. Well, those greedy corporations had to raise their wages because the cost of living went up. Their raw materials went up. Their power bills went up, their rent went up, everything went up. So of course the businesses are raising their prices. So they're already trying to spin that class warfare story to blame inflation on companies. The other thing I see a lot of powerful elites doing in the world right now is beating war drums and trying to deflect anger outward at the Russians, at the Ukrainians, at China, Taiwan, at whoever, right? When the public gets angry at the economic situation, start a war. That's like in the tyrant's playbook. So remember that. Remember that when they're in the news and it seems like they are just trying to march us off to war, folks. Remember that. That's what the elite and the ruling class needs for them to happen, because it keeps our anger off of them. So thank you very much, Mr. Tunes and More, otherwise known as Harry Dan 2. For the super chat and for the support of the channel. I really appreciate that, sir. And it is now 8:28. We are 2 minutes away from the release. I'm going to be refreshing this page quite a bit over the next few minutes, folks. So, I just got a text from the moderator, and he has asked me to remind you guys that the like button is absolutely free of charge. The price of the like button has not gone up. It has remained firmly planted at 0, and also subscribing to this channel is totally free. So, if you could help me out while we're waiting for the release, I'd sure appreciate that. It helps for the algo. The algo gets what the algo wants. And we are 1 minute away. Let's see what markets are doing really fast. Okay, looks like futures are wanting to move higher, particularly in the Dow. NASDAQ still not quite in the positive territory for the day. The Dow's now up 70 points. These are the futures, reminder. Crude still over 90. Let's see what the other commodities are doing. By the way, how about those corn prices? If only somebody could have seen the price of corn going up ahead of time. And that is a joke. I've been banging the table on corn since October, folks. Let's see what else we've got right now. U.S. corn up $7 at $6.53. And I have been working on a corn video all week that will be coming out in the next few days. Let's see what we've got here. Have they updated yet? It is now 8:30. Still no update. We should have it within the minute. Standing by. Come on, BLS. Don't let me down. Again, we are looking at a bigger input. Here we go. CPI for all items rises 0.6% in January. Electricity and shelter indexes increase. Oh boy, in January, the consumer price index for all urban consumers rose 0.6% month over month and 7.5% over the last 12 months. So we have got 7.5, folks. That is a big, big inflation number. The market is not going to like that. Stocks are not going to like that because that could signal a more aggressive Fed is on the horizon. And right now, the biggest enemy of the stock market is the Fed. All right, let's get into the report here. The Consumer Price Index for all consumers increased 0.6% in January on a seasonally adjusted basis. The BLS reported today over 12 months, the all index items increased 7.5% before seasonal adjustment. Increases in the index for food, electricity, and shelter were the largest contributors to the seasonally adjusted all items increase. The food index rose 0.9% in January, following a 0.5% increase in December. That's those empty shelves that have been showing up on the Economic Ninjas subreddit, folks. If you're not a member of that subreddit, I highly recommend it. The energy index also increased 0.9% over the month, with an increase in the electricity index being partially offset by declines in the gasoline index and natural gas. Declines in gasoline? Where does that come from? Am I seeing this right, folks? Did I not drink enough of my wake-up juice this morning? Am I still dreaming? Did somebody just say declines in the gasoline index in the month of January? I got to bring it back up, folks. That's the gasoline chart for the month of January. Raise your hand. Anybody see a decline in there? Anybody? Anyone? Bueller? No? Okay, moving on. Declines in gasoline. Oh my goodness. All right, we must press on. The index for all items less food and energy rose 0.6% in January, the same increase as in December. Okay, this is the stripping out food and energy number now because people don't need to eat and people don't need to stay warm, right? This was the 7th time in the last 10 months it has increased at least 0.5%, along with the index for shelter. The indexes for household furnishings and operations, used cars and trucks, medical care, and apparel were among many indexes that increased over the month. And this is a reminder that the dual mandate of the Federal Reserve is to maximize employment and stabilize prices. And they just listed all the things that got more expensive over the last month. Pretty much everything you need to live. How's that dual mandate going? Governor Powell, Chairman Powell. The all items index rose 7.5% for the 12 months ending January, the largest 12-month increase since the period ending February 1982. So we have got a 40-year high in inflation. Wow. Exactly 40 years, right? February of 82. We're a month shy of 40 years. The all items less food and energy index rose 6%, the largest 12-month change since the period ending August of 82. The energy index rose 27% over the last year, and the food index increased 7%. All right, so here we have the numbers, and let's just go down here. Here's your all items numbers, your month over month, 0.6, and your 7.5 year over year. Here's that food number. That got bigger, 0.9%, up from 0.5 for a 7% increase for the year. Big jump in food at home. Look at that, from 0.4 to 1.0. All right, again, that is that situation going on at the grocery store on the shelves, that 1% to 7.4%. So that's a very big deal here, folks. That hits everybody, right? That hits the poor, that hits the working class particularly hard. A lot of people don't have room in their budget for big increases in their food bill. And by the way, 1% month over month, I don't know if anybody noticed, chicken is getting really hard to get, and it's getting more expensive. Chicken went up a whole heck of a lot more than 1%, as did beef, as did pork, as did just about everything I buy. I am cheap AF. I watch the price of everything, and everything is up a heck of a lot more than 1%. But moving on, this doesn't make sense to me, this energy number. 0.9%, the same as December. Well, wait, they revised the December number. That's interesting. Okay, this was not mentioned in the headline, folks. If you recall, we just went over the report from last month. In December, it was negative 0.4% month over month. Now, all of a sudden, they're saying the December number was 0.9%. So there were some upward revisions to the December numbers in here. That's interesting. Unless that's a typo. But it was definitely negative 0.4 for December for the energy index. Now it's 0.9. So we did get an increase in the month over month number. And now we're at 27%. I got to go back over those December numbers now. I wonder what else changed. That's interesting. Okay, what else we have? Again, gasoline. I don't know where they're getting that the gasoline price went down 0.8%. I don't see any downward movement in that gasoline chart anywhere. I don't understand that. 9.5% increase in fuel oil. Again, that's one that hits your average Joe, right? That hits people's household budgets. Electricity, utilities, all more expensive. Commodities, less food. Okay, let's see. Apparel is up 1.5%. All right, here we go. Vehicles. All right, so new vehicles. As expected, we got a 0% month-over-month change for a 12.2% year-over-year. So that's about as expected. I'm a little surprised to see used cars and trucks are still up 1.5% for the month. Remember that Manheim used vehicle index showed that we were pretty much flat for the month. So that really surprised me. 40.5% year-over-year increase for the price of used cars and trucks. 40%. I tell you, in December of 2020, I decided I was going to get myself a new used pickup truck. I bought a 2018 Toyota Tacoma. I love that truck. My 1998 Tacoma that I drove for like almost 20 years, it finally died on me. My God, I love that truck. It was like part of my soul. I had to give it up. But the frame rusted in half. The truck broke in half. I would have driven that thing for 10 more years if you let me. I love that truck. So I had to get a new Tacoma. And I just decided, I was like, you know what, inflation is going to hit next year. I mean, I knew the writing was on the wall, so I decided, all right, I'm going to be moving out of cash anyway. This is over a year ago now. I bought that truck, and now it's worth, according to this, 40% more than I paid for it. Can you believe that? My goodness. Also on here, I see transportation services is up 1% for 5.6% year over year. So some big moves here, folks. Some big moves, 7.5%. That is a huge inflation number. Let's see real quick what the markets are doing. Again, I don't think markets will have liked this news. Looks like S&P futures have reversed somewhat. They're now in negative territory. The Dow gave up a couple of its points, but still in positive territory. The NASDAQ, a little bit further negative. The Russell is flat for the day. Let's see what we've got. Oil, kind of unchanged. I'm going to refresh again here. No big changes in oil. Gold and silver appear to be heading lower on the news. Curious. Well, let me just say this. With gold and silver, in these first few minutes, folks, you don't want to get caught up in the algorithms trading in the first few minutes after a release like this. All right, because the computers start fighting each other. Billions of dollars flowing back and forth 1 trillion times a second. Let the dust settle before you do anything. Not a financial advisor, not financial advice, but I'm just throwing that out there. And also, I figured I'd point out Mike Robin, sir. Thank you very much from Robin RC Models. Or Mike Binder, I always call him Mike Robin. For the super chat, sir, he says Bitcoin dumped quite a bit, 40K incoming. Well, Michael, thank you for the support of the channel. Let's take a look at what Mike is talking about. Bitcoin, oh, wow, look at that drop in Bitcoin. Look at that. Very, very astute observation, Robin RC Models. And, sir, thank you very much for the super chat. Bitcoin sold off hard on that news. Looks like we got a little bit of, I don't know if that's a dead cat. It came back a little bit. Let's take a look at that. What do you think is going on here? Is this Tether shenanigans in real time? Or do we really have, oh, I hate these, when these candles do this. Yeah, look at that. Down quite a bit, under 44,000. Do I think 40,000 is inbound? Mike, it's hard to say. Number one, crypto, I just cannot time markets with crypto. I don't even try. That's why I dollar cost average into Bitcoin a little bit every week, whether the price is up or down. That is a ultra long-term strategy of mine. So I don't get caught up in the day-to-day trades, although I do watch them for, there's entertainment value in there. But that is very interesting. And I see another super here from Tunes and More, otherwise known as Harry Dan. MMMRI is at 163 as the yield curve flattens. 163, that big number is getting closer. Thank you, Harry Dan, for that update, for your support of the channel, and also for taking the time to write that code. Harry Dan, too, is on TradingView, and he took the time to program in the modified Mannarino market risk indicator. And I was pleasantly surprised to see that so soon. I mean, I don't remember, Harry Dan, how fast you did that, but it was like within a few hours of posting that video, that code had appeared on the internet. That was a very, very flattering and humbling experience to see that there so fast. Once again, sir, thank you very much for the support of the channel. Let's look back at what the markets are doing right now. Still not a lot of reaction. We're still quite a bit a ways from the opening bell, so we're going to give the algorithms a little bit of time to react to what's going on right now. Let's see what energy and commodities are doing here. Gold and silver heading, looks like silver still in positive territory, gold lower. Copper's making a big move. Keep your eye on copper, folks. I don't know what's going on over there. Somebody sent me a message about copper this morning. I did not have a chance to read it in its entirety. I get a lot of emails, folks. Looks like gas and crude headed higher. Oil up $1 now. Seems like the base metals are all rallying right now. And there is corn up $5.60, up over $650. There is more to come on corn on the Nobody Special Finance channel. And I see Mark Schwartz stump grinding. Thank you, sir, again for your support of the channel. I really appreciate it. He says, sold my LNG calls as they were nearing expiration, replaced with junk silver. Thank Jack and Gigi. Well, Mark, congratulations. I remember you mentioned you bought those LNG calls. I don't remember exactly what the price was, but you bought them low, brother. Because I remember you bought them on that big 1,000-point dip day. What day was that? That day that it went down 1,000 and came right back up. I remember that, and I remember looking at the same trade, and I didn't have the guts to do it. And I told myself, don't trade on a 1,000-point swing day. And you made that trade, and you made out like a bandit, Mark Schwartz. So congratulations, sir, on your gains. I would say it's probably not a bad time trade to take some profits in LNG right now. I have not taken any LNG profits yet, but let me just show you this one. I was looking at this morning, the Dutch TTF natural gas hub. That is where Cheniere Energy sells their gas into. And you see we are down pretty low right now at 72.47 for those European gas prices. And that was really the main driver of that LNG trade, besides the inflation narrative and the commodity story, was this big, huge arbitrage between European and U.S. natural gas. And we're starting to see some of that evaporate as things in Europe appear to be calming down a little bit. God willing, they continue in that trend. So the bull case for LNG could start to dissipate a little bit here. And the stock itself, let's bring that one up. The stock itself at 116. Well, I mean, that's still a really handsome looking chart. I'm going to hold that one through earnings. Let's just put it that way. I think I'm going to hold that one through earnings. I don't have calls, though. I have shares. So, I don't have the theta decay working against me. I do have calls in my other energy plays. But congratulations, Mark, and thank you for your support of the channel very much. All right, folks, we are nearing 8:45. It has been a good morning. So, long story short, 7.5%. That is the highest inflation read of my lifetime. Well, since I was in diapers anyway, the highest inflation read. And again, I would just point out, folks, that these are these adjusted numbers, that a 7.5% reading today is a 16 or a 15.5% reading back in 1982 or 1981 because they have constantly adjusted the methodology to underreport the CPI index. So the dollar continues its downward decline. Forget what the Dixie does. The Dixie is measuring the dollar strength against other currencies. Focus on how much stuff the dollar can get you and its purchasing power. That continues its decline at an alarming rate. All right, guys, I want to thank you for checking out this video. Also, don't forget there's a link in the description. The Economic Ninjas Speak Freely event in Dallas-Fort Worth on March 5th. There are only a few spots remaining. That event is filling up fast. I have put a link in the description. You can reserve your spot now. I will be there. I will be among the many speakers. We have a great lineup for that event. Fantastic bunch of guys, and I really look forward to the opportunity to meet some of you folks. I want to thank you for your time. Have an awesome day, and I will see you tomorrow afternoon for my weekly live stream. All right, guys, until next time, live small and dream big.